Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this. It is February 18th, 2026. And I have to ask, have you looked at your portfolio app today? Because if you haven't, maybe just don't.
It is pretty ugly out there, isn't it? I checked mine this morning and almost dropped my coffee.
Ugly is putting it politely. If you're just glancing at the headlines, the vibe is just heavy. The market sentiment score, which, we track religiously, is sitting at a 13. That is officially extreme fear.
Yeah, 13 is the kind of number where you start questioning your life choices. It's a sea of red for retail.
Yeah.
Bitcoin is struggling to find any momentum, hovering around 67,800. It's down a bit, but it just feels stuck.
Exactly. It feels heavy, it feels boring, and honestly, if you're new to this, it feels a little scary.
But
here's where it gets really interesting. This is why we do these deep dives. If you look past that price tag, if you ignore the extreme fear label for just a second, there's a massive disconnect. Beneath the surface, the water is absolutely boiling.
it's a total paradox.
Right. We have major institutions making moves. We've got massive mergers, regulatory breakthroughs that you'd think only happen in a full-blown bull market. And yet, the price isn't moving.
That is the divergence we're looking at today. Price action suggests stagnation. Everyone is either bored or scared. But the infrastructure development, that suggests acceleration.
So our mission for this deep dive is to bridge that gap. We're not just going to read tickers and, cry about red candles. We need to understand why Harvard University, yes, that Harvard is shifting its strategy right now.
And why a company like Nakamoto is buying up media infrastructure.
Exactly. And we really need to look at what's happening in Asia and the Middle East, because while the U.S. market feels fearful, they are printing licenses and launching IPOs.
And we also have to have a serious conversation about tech. There's this debate bubbling up in our sources about artificial intelligence and blockchain. Do they need each other? Or is it, a mismatch?
Oh, we are definitely getting into that. The
Yeah.
garbage in, garbage forever problem. But let's start with the pulse of the market. Give us the lay of the land, but go beyond just the price. What are the underlying numbers screaming right now?
Okay, so snapshot time. Bitcoin is flat, roughly 67.8. Ethereum is still sitting just under that psychological $2,000 mark, around 1998. It keeps knocking.
But it won't walk through.
Won't walk through. But there was one piece of data in the stack that actually surprised me. Ripple, XRP.
That was a standout for me, too. In a sea of red, the old guard is moving.
It is. While the broader market is down or flat, XRP has actually managed a 6% gain over the last week. And more importantly, it has overtaken Binance Coin BNB in market cap.
That is wild. It feels like a reshuffling of the leaderboard. In a market of extreme fear, capital is rotating back to, 2017?
It certainly looks that way. Maybe a flight to perceived stability, perhaps. But while XRP is having its moment, there are some metrics in the source material that are, let's just call them worrying, specifically regarding stablecoins.
And this is critical for understanding the fear, right? Explain the stablecoin dynamic to us. Why does the volume matter so much?
Think of stablecoins like USDT, USDC as the ammunition of the crypto market, the chips at a poker table. When you sell your Bitcoin because you're scared, you hold stablecoins. When you want to buy back in, you use those stablecoins. Right now, the stablecoin market cap is around $38 billion, which sounds like a lot of chips.
Okay, so there is money on the table.
There is money in the room, but the trading volume is surprisingly low. Tether, USDT, is seeing volumes below 80 billion. Ideally, in a healthy market that's ready to run, you want to see that double or triple. Low volume means the chips are in people's pockets.
Not being pushed into the pot. So low volume means there's no dry powder ready to fire. The market is just sitting on its hands.
Precisely. It's a waiting game, and that's compounded by the ETF inflows. We are seeing inflows, yes, but they are meager. About 26.8 million this week.
26 million sounds like a lot of money to me, but in the context of BlackRock and Fidelity.
It's a rounding error. It's barely a blip. To signal a real reversal or a bull run, we'd expect to see billions flowing into those spot ETFs. 26 million tells us institutions are in wait-and-see mode. They aren't catching the falling knife.
And then there's the decentralized exchange volume. This one really stood out because I remember 2025 being the year of DeFi. Everyone was going on-chain. But the sources say DX dominance is way down.
It has crashed to about 26.4%. That means nearly 3/4 of all volume is happening on centralized exchanges like Coinbase or Binance.
Wow.
Yeah. The total value locked TVL is down to around 95 billion. Last year, we were seeing 130, 140 billion regularly.
So when fear hits, people retreat to safety. They stop experimenting with smart contracts and they go back to the big corporate exchanges.
That is exactly it. It's a flight to familiarity. When you're scared of losing money, you don't want to worry about managing your own keys or, smart contract bugs. You want a customer support number.
Which makes what we're about to discuss even more confusing. If users are leaving, if volume is drying up, and if everyone is retreating to safety, why is Harvard University making moves?
Let's talk about the institutional shuffle.
This is the headline that stops you in your tracks. Harvard University's endowment, one of the smartest, most conservative, slow-moving piles of money in the world, has trimmed its Bitcoin exposure by about 20%.
Okay, stop right there. If I read that headline in isolation, I think Harvard is dumping, they're getting out, the party is over. Is that what's happening?
Not exactly. That's the headline risk. You have to read the rest of the report. While they trimmed Bitcoin, at the same time, they made their first purchase of Ethereum. Specifically, shares of the iShares Ethereum Trust.
So they aren't exiting the asset class.
They're rotating. So selling the winner to buy the laggard. Or is it something else? Why swap digital gold for, digital oil?
It looks like classic portfolio rebalancing. Bitcoin has likely outperformed parts of their portfolio, so they take some profit. It's just prudent management. But the move into Ethereum is the real signal. It suggests they see value in the utility layer. Bitcoin is for holding, Ethereum is for using.
So they're betting on the network that powers tokenization, stablecoins, DeFi, all of it.
Exactly. It suggests they believe the yield or utility narrative has more upside right now than the pure store value narrative. It is not a lack of faith. It is a diversification of strategy.
Speaking of strategy, let's talk about Nakamoto. And I don't mean the mysterious founder. I mean the company associated with David Bailey. They just acquired Bitcoin Inc. This is a huge consolidation, right?
It's massive. Bitcoin Inc. is the parent company of Bitcoin Magazine and major global events. Nakamoto is acquiring them in an all-stock deal.
What does that tell us?
It tells us that infrastructure and media companies are consolidating. I mean, think about it. When prices are boring and ad revenue is probably down, weaker companies fold. Smart businesses with a long time horizon, they buy market share. They're building a media giant.
It reminds me of the old saying, build in the bear market.
Yeah.
Even if we aren't in a full bear, the sentiment is definitely bearish. But they're doubling down.
Exactly. They're betting that when the retail crowd comes back, when that sentiment score flips from 13 back to 80, they will control the microphone.
And they aren't the only ones. If we look across the Pacific, the activity level completely contradicts the fear sentiment we are seeing in the West.
The Asian markets are incredibly aggressive right now.
You're talking about the Philippines. This story about Maya caught my eye. We're talking about a digital bank planning a massive IPO.
A $1 billion IPO in the U.S., to be specific. Maya is a licensed digital bank in the Philippines, but they are heavily integrated with crypto. They offer in-app trading, payments, the works.
So a crypto-friendly bank from the Philippines is trying to list in the U.S., where regulators have been, let's just say, less than friendly.
It's a bold move. It really highlights the intersection of TradFi, traditional finance, and crypto. But the sources do point out some risks. There have been reports of user issues, specifically token unavailability within the app.
Token unavailability. That is a terrifying phrase if you're a user. Sorry, we can't find your money right now.
Exactly. And if they go public in the U.S., that kind of technical glitch turns into a regulatory nightmare. The SEC does not take kindly to token unavailability. But the fact they're even attempting a billion-dollar listing shows that the appetite is still there.
It shows that companies are still hungry for U.S. capital, despite the friction. Now, let's hop over to Hong Kong. We saw a partnership there with the Hong Kong University of Science and Technology.
Right, HKUS. They signed a 3-year agreement with a mobile gaming company. It involves a $770,000 investment.
Okay, I'll play devil's advocate. We just talked about a billion-dollar IPO. 770 grand seems like pocket change. Why does this matter enough for our deep dive?
It's about the focus and the timeline. The funding is specifically for research into the convergence of blockchain, AI, and digital assets. It's R&D.
Oh.
While the market is worried about the price of Bitcoin today, Hong Kong is funding research into what the tech looks like 3 years from now.
It is a signal of long-term commitment. They aren't trading the chart, they are building the lab.
Exactly. And speaking of building labs, we have to talk about the Middle East. The source material was very heavy on Dubai and Saudi Arabia. It feels like they're in a completely different cycle.
They really are. While the U.S. is suing crypto companies, the Middle East is licensing them. Let's start with Dubai.
Dubai is fascinating. Animoca Brands, a giant in the blockchain gaming and metaverse space, just secured a VASP license.
VASP stands for Virtual Asset Service Provider, right?
Correct. This license comes from VAR, Dubai's regulator. It allows Animoca to offer broker-dealer and management services. But here's the catch. It is specifically for institutional and qualified investors.
So, not for me and you buying $10 of Dogecoin on a Friday night.
No. And that is the maturity signal. This isn't about retail speculation. It's about creating a regulated environment for institutions to manage digital assets. It reinforces Dubai's position as a place where crypto is growing up.
Growing up is a good way to put it. But if Dubai is growing up, Saudi Arabia is building a whole new playground. We need to talk about this sandbox launched by the Real Estate General Authority, REGA.
This is one of the most significant developments in the stack. Saudi Arabia has launched its second regulatory sandbox, and the entire focus is real estate tokenization.
Tokenization. That buzzword is everywhere. But here we're talking about fractional ownership, right? Taking a skyscraper in Riyadh and slicing it into digital shares.
Exactly. Imagine a $100 million building. Instead of needing one buyer, you issue 100 million tokens at $1 each. Anyone can own a piece. The sandbox allows companies to test this for 6 to 24 months under strict supervision.
And the source mentioned that a company called NAM Company from the first cohort actually graduated. So this isn't just theory, it's a production line for regulation.
It is, but this brings up a massive philosophical debate that was highlighted in the notes about this sandbox. It's the tension between permission and open blockchains.
Yeah, let's dive into that, because if the Saudi government is running a sandbox, They probably aren't using a completely decentralized Wild West blockchain. They want control.
Correct. They're likely favoring permissioned blockchains. These are ledgers where only select actors like government bodies, licensed banks, developers can validate transactions.
Which sounds safer, right? You know who is running the show? It's like a private club versus a public park.
On the surface, yes. But the source material raises a critical counterargument. In a permission system with a small group of validators, say 10 banks, it's theoretically easier for those actors to collude.
Collude how?
If they all agree to rewrite the ledger, they can. They control the history.
Wait, so the argument is that a safe government chain might actually be less secure than Bitcoin?
In terms of immutability, yes. In an open blockchain like Bitcoin, you'd need to overwhelm 51% of a massive global decentralized network to rewrite history. It's practically impossible. In a permission room of 10 people, you just need a meeting.
That is a terrifying thought. You trade the chaos of the open market for the safety of a system that could technically be rewritten by the people in charge.
And that is the trade-off. Regulation brings safety and recourse, but it often sacrifices the core ethos of crypto. Trustlessness. You're moving trust from code back to people.
Speaking of trust and code, let's pivot to our final pillar, the clash of the titans. AI versus blockchain. The source material had a really spicy debate about whether these two technologies actually need each other.
It's the symbiotic link debate. The central question is, does blockchain need AI, or does AI need blockchain? Or is it just a buzzword soup where companies use both to sound cool?
Well, I'll play the skeptic here based on the notes. The argument against combining them is speed and garbage in. AI needs massive data, fast processing, blockchains are slow. And more importantly, the source used a specific example, the BBC video of President Trump.
Right, this was a hypothetical to illustrate the garbage in problem.
So let's say someone generates a deepfake video of President Trump declaring war. It looks perfect. They label it as coming from the BBC. If you upload that to a blockchain, what happens?
The blockchain secures the file and makes it immutable.
So congratulations, you now have immutable, unchangeable record of a lie.
Exactly. The blockchain doesn't know it's fake. It just knows it was uploaded. Garbage in, garbage forever. That is the skeptic's view.
It validates the file, not the truth.
Precisely. That's the oracle problem. However, the optimist's view and the counter-argument presented is all about audit trails and data integrity.
How so? How do we fix the deepfake problem?
Well, think of it this way. AI is black box technology. We often don't know why it made a decision. If we anchor AI data sourcing on a blockchain, we create a tamper-proof history.
So it doesn't prevent the initial lie, but it prevents someone from sneaking in later and changing the data to cover their tracks.
Exactly. And the source suggests a multi-layered verification system. AI could essentially act as the auditor. It could cross-reference data streams against the blockchain to flag anomalies.
So if the blockchain says the BBC signed this video at 2:00 p.m., but the video floating around doesn't match the signature,
then the AI flags it as a fake. The blockchain becomes the source of truth for what the data was at a specific point in time. It stops gaslighting.
it creates a timeline that no one can mess with.
Precisely. It ensures data integrity. In a world of deepfakes, proving that a specific piece of media existed in a specific form at a specific time is incredibly valuable.
It is wild to think about. We're sitting here in a market of extreme fear, worrying about the price of Ethereum dropping $10, while in the background, people are figuring out how to stop AI from rewriting history and how to sell 1% of a Saudi skyscraper.
That is the disconnect we talked about at the start. The price ticker is a mood ring. It changes color every day based on how people feel. But the infrastructure, the Harvard investments, the Dubai licenses, the AI research, that is the engine. The engine is running hot, even if the car isn't moving fast right now.
So what does this all mean for you, the listener?
It means you have to look beyond the daily red candles. The institutional shuffle tells us that big players are positioning for the next phase. They're consolidating media, they're buying utility assets like Ethereum. The global moves tell us that the US isn't the only game in town.
And the tech clash tells us that the use cases are getting more complex. We aren't just sending digital cash anymore. We are trying to secure the truth in the age of AI.
Exactly. The fear in the market is about today's price. The activity in the market is about tomorrow's structure.
It really makes you wonder about that Saudi sandbox again.
In what sense?
Well, we are rushing toward this world of tokenizing everything, real estate, stocks, art. It's potentially a $50 trillion market. But if we're doing it all on permissioned government-controlled blockchains, are we actually building decentralized finance? Or are we just building a slightly more efficient version of the traditional banking system, just on a slower database?
That is the big question. If we trade decentralization for regulation, have we really changed the game?
Yeah.
Or have we just upgraded the back end of the status quo?
Something to think about while you watch those tickers. Maybe don't check the app today. Go for a walk. We'll be here tracking the infrastructure. That is it for this deep dive. Thanks for listening.
Stay curious.